What's up, guys? Have you ever struggled with daily bias? Or maybe you enter a swing trade on a long-term trend, and then right as you enter it within a couple days, the market turns against you and starts going lower. Well, that happened to me a lot when I first started trading as well. And then I started following this system that I'm going to teach you guys today. This trend system really helps you determine when to get into trades, when to get into swing trades, how hard to press on the gas, and when to see you could see possible reversals or possible down days in up markets or up days in down markets. So let's get into it. This specific trend following system has two components to it. You're going to use a journal, which personally I use as Excel, and then you're going to have charts, of course, as well. And so let's get into each and individual part. First, you're going to have your journal. Your journal is going to have a few different things, and this is what it's going to help tell for you. It's going to track the length of trends. It's going to track the average days for a stress test, which what a stress test is a down day on an uptrend or an up day on a downtrend. It's going to track leaders and laggers for sector wise, and then we also take notes of significant action. So we'll go into each one. The average length of a trend is roughly 50 days, and so it's going to help prevent late buying and help understand when possible consolidations could happen. Generally, what you see is around day 30 to 50, you really start seeing more of a consolidation and more of a pause in the market. And in the beginning of an uptrend, you see more of the uptrend portion of it. So by tracking the length of the trend, we really can understand when to enter trades and when not to enter trades. Average days for stress tests. And like I said, stress tests are down days and uptrends and up days and downtrends. The average day for stress test days are going to be 4 through 6, and then also 10 through 12. Well, actually, we're going to go 13. 4 through 6, and then 10 through 13. Those are going to be normal days where you're going to see stress tests in the market. It also is going to track leading and lagging sectors. Normally, leaders, they're the ones that top out first, but they're also the ones that bottom out first. So when you're looking at the leading sectors and you see a sector rotation, this journal is going to help you recognize when there's going to be a sector rotation and be able to get on top of it beforehand. And this is also, you're also going to take notes of significant action. You're going to take notes of when you see upside reversals and downside reversals. You're going to take notes of a break above or below significant moving averages. Then you're going to take notes of when we see displacement and market breadth. And with which market breadth is really important because you really see the markets how they are on underneath the surface. Indices don't move the stocks. The stocks move the indices. And so by understanding how market breadth is, we really can understand where the indices could go. This specific trend following system that we're using is going to be used with the NASDAQ. You can use it on other indices like the Dow or the S&P 500, but in this way that I specifically show it and the way I specifically do it, I use the NASDAQ only. The NASDAQ usually runs the most and it has the highest beta. So it usually moves more than the Dow in a sense of a year. It usually moves more than the S&P 500 in the sense of the year. And the Nasdaq has the most amount of growth stock. So in a high growth stock, hot, healthy environment, the Nasdaq you're going to see move the most, and it's going to be the best opportunity for growth and for movement. And that's why I use the Nasdaq specifically. So next, let's go into our charts. You're going to use this on a daily chart only. That's it. You're not going to use it on a 4-hour, on a 1 hour, on a 5-minute, 30-minute, 15-minute, just a daily chart. And that's how we're following our trend, is only on a daily chart. What you're going to do is you're going to use a 21-day EMA on the daily chart. Well, why the 21 EMA? The 21 EMA is 20 days plus today's current day. So if you're 2 hours into the market open, then it's 20 previous days plus 2 hours worth of data. 20 days is generally 1 full month of the market, of trading market days. And so normally every month of the market has 20 trading days. So by using the 21 EMA, you're getting 1 full month worth of data plus today's data. And that's why we use the 21 EMA. I originally learned this from William O'Neill and Jim Ropel. Jim Ropel has a saying that says, no good things happen below the 21 EMA. So we're going to be able to use this for swing trading, for day trading, and then for stock selection and understanding when to get in and when to get out of stocks. For swing trading indices, NASDAQ specifically is really easy. The 21 EMA is your entry and exit signal. So you enter as it gets above your 21 EMA, and then you exit as it gets below your 21 EMA. For day trading, you're going to know, it's going to tell you when to hit the gas and when to slow down. As I said earlier, trends usually only last about 50 days. And so in the beginning of a trend, what you want to see and what generally happens is you see a stronger push and you see stocks closing at the high of day. They have a higher probability of closing at the high of day. So if you know that stocks have a higher probability of closing at the high of day, then in your day trades, you can hold your trades longer and understand that any pullback is more likely to get bought up and continue higher towards the high of day and closing at that high of day. You can anticipate stress tests for your day trades. So if you already have a long bias because your trend journal says, hey, we are long, then and it's in a specific time where that 4, 5, 6 day or that 9, 10, 11, 12 kind of area, then you're more likely to see stress tests. So you can understand that, hey, we're in a day that we might see a stress test. I'm not going to necessarily push the gas, and I can anticipate that maybe we might have a pullback on this specific day. And then you can anticipate when you're going to see more likely to have consolidation days. Well, normally consolidation days happen after day 30, especially more after day 40. And I'll go ahead and show that in the charts as well. And that way, when you're playing consolidation days, you're not necessarily going to shoot for the stars and you're not going to hold all day. You know that most likely the day is going to close where it opens. And so any down move is probably going to get bought up and any up move is probably going to get sold off. And so that can really help you with day trading to understand when and where we might look for those times. And then next with stock selection, it's going to tell you how invested your portfolio should be. Normally when you first get in an uptrend, you should go about 20, 30, maybe 40% if you're aggressive invested into your portfolio. As you see your stocks and the market making progress, you can slowly scale in. And that's going to go add up to 30, 40, 50, 70, 80% invested, depending on how the market really rolls. Well, once you get fully invested, that should be about day 20 at the very, very max. At the very, very max, you should be roughly full invested as much as you really want to be for this cycle right around day 20. You don't necessarily want to add anything more after that. After day 20, your stocks should ideally have at least 10 to 15% increased in their position from what you have already had. So this will tell you when to trim into strength and understand that, hey, we might be on day 40 into a uptrend. I've been holding these stocks for 30 to 40 days, and I know that we are more likely to start pulling back soon. So I can trim into strength, move my stops up, and make sure that I am not going to lose on this trade. So that's how to do it. That's how to use it. Let's go ahead and dig into it and show you how I run it. So first, we're going to go to the trend journal here. It's just a basic Excel sheet, and I'm going to show you guys how to create this for yourself and to get this on your own Excel as well right at the end of this video, so stay tuned. I originally started this in September 11th, 2023, so that's when I started doing this, and this specific journal shows all the way, every single day, all the way until there. Comments, leaders, laggers, everything. I started doing the leaders and laggers kind of not immediately right after. So you can see right here, day 4, day 5, 6, stress test. Day 10, stress test. And I'm not going to go through every single one of these. Day 6, stress test. Day 5, -5, stress test. Day 5, stress test. Day 10, 12, stress test. Notice these patterns of specific days as we go that we have normal stress tests. Day 5, 6, stress test. And so you can see that we're able to use this data as a really good way, day 6 stress test. You're able to see that we're able to use this data as a really good way to understand, hey, we might have a pullback today. We might have a consolidation today. I have different comments on each one. In the comments, what I'll put is 21 EMA test. That's what this one was, 21. So if we came, touched the 21 EMA and held off of it, that was a test. Downside reversal, weak breadth, heavy volume. Very short to the sweet comments, nothing too crazy. Heavy distribution day. When we had the September 17th, we called the market into a downtrend. We said largest down day since 2022. We are now done. This is now a downtrend. We're not looking to buy. And notice here, after day 50, we were marking distribution day, some 21 EMA test, all-time highs. We were having downside reversals towards the end of our trend where you could really show that, hey, we're looking to go back down. And then exactly what happened. As we were in here, we had 15 days of an uptrend. If you watched my weekly outlook and you went back through it towards the 5th, and so it would have been right around this weekend, I was saying that we're starting to get extended in our downtrend. Normally our downtrend usually only lasts 10 to 15 days. Let's start to look for a possible bounce. And that's exactly what happened. So if we look here, this was 15 days of a downtrend. Then we bounced. Come up here, the next downtrend. It was, where is it? 10 days. Next downtrend, 11 days. So we're not seeing very many downtrends over 15 days. And then what do? We had a downtrend. I think at 13 days we bottomed. Let's look. That was on Monday the 6th, Monday the 5th. Monday the 5th, we had a huge downside reversal. That was our bottom of this current leg. And that was on day 14, right around the same time that we were looking for. It was on day 13, right around that same time where we said, hey, let's start looking for possible reversals here. And that's what happened. We marked, hey, we gapped down and then we had an upside reversal. Inside day, upside reversal. We're showing, I have great breadth here. I think, what was it, the 14th? 13th, we broke above the 21 EMA. I actually need to mark that. 21 EMA break. Simple as that. And then we kept the low day and had a broad range rally. The low day was above your 21 EMA on the 15th. So that's how you do the specific charts or the specific journal. So you're going to have right here, we have our leaders. What is our leaders? Right now we're having metals, finance, metal. China was actually weirdly a leader on Friday. We've seen genomics, we've seen tech moving, we've seen fintechs, fintech semi software. Same over here. So we're showing that it's those same sectors are continuing strength. Solar energy home builders, these have been laggers. EV China, laggers. During downtrends, what do you normally see? You see semis lagging. At the end of an uptrend, what do you normally see? Semis lagging. And so if we look back here at the end of some of these other uptrends, semis lagging, EV lagging, small caps lagging. So it shows that, so it helps you determine, hey, when you start seeing semis and tech lagging, that, hey, we might be towards the end of this possible uptrend. We might be towards the end of this specific cycle. And so that's just what these are. These are keeping track of market cycles. So next, I'm going to go into the NQ and go into charts and show you exactly how this has played out over the last year or so. So right now, we just broke above your 21 EMA. Boom, we put it in an uptrend on day 2 above the uptrend above the 21 EMA because it wasn't a clear, decisive break. It was, but it wasn't full. Once we created this fair value gap on Wednesday, I ended up putting it at putting it in a 1. So right here, Wednesday, the 14th, 1. And then the day we broke above, I just put it as a 0. Because that way it shows that, hey, we're above it, but now we want to see strength. We want to see a push above it and not just get above it and do nothing like this right here. We're above it and we're doing nothing and just not holding at all. So we're showing strength out of it. And so that way, this was day 2, day 3 was Friday, and day 4 will be Monday. Unless something crazy happens, day 4, Monday will still be considered an uptrend. And so that's how we're looking at it right here. And then you see here, we broke down on the 17th. Well, we said on the 17th, it was such a heavy break. We said in heavy volume, we said, okay, this is zero. We're looking short. So right here, 17th, we went zero. The next day, day one. And then where did we go after that? We went down 12% from there. And we know every single time we're not looking to buy until we get back above your 21 EMA. And now since we've been back above our 21 EMA, we're up 3.5%. So right here, what you would do in a swing trade scenario. In a swing trade scenario, you would enter at the close about 30 minutes towards the end of the day, right on the day that you break above, or the next day at open. Doesn't really matter in my opinion. And then you hold, is just very simple. You hold until the close of the day that you break below. So very, very simple. And there's nothing much to it. I mean, that's literally it on a swing trading basis. You can enter shares, you can enter forex, you can do forex with it, you can do options with it. If you're doing options, get 90 days to 120 days out, in my opinion, and that's the best way to do it for swing trading. For day trading, notice here, day one closing at the highs. As we started at early in the uptrend, we are closing at the highs. Test it, bounce, closing at the highs as we start pushing up. Right here, this is as we go after day. Oh, this was a choppy one. This is where I wanted to do. Really, after day 30, right around here, we stop displacing highs and we just start chopping around. Notice after this day, that was around day 30, we started chopping around. And that's what you can see with a lot of these different uptrends. How long do they last? Right around 50 days. This one specifically and lasted 47. This one, how long did it last? 50 days to the point, to the T. This one, how long did it last? 42 days. See the pattern here? We can go back through here. This is 2023. How long did this last? 67 trading days. And you can see after, what is this, after day 50, this really started going sideways and it was choppier. You started seeing slower moves and not moving up as much. And so, like any other system, it's not going to be perfect. It does fail, and that's perfectly fine. Notice here, you would have bought in right here, and you would have sold right here. A 1% loss. Again, right here, and then sold right here. A 1% loss. So your average loss over the last 2 years would have been right around a 1% loss. By here, I mean, if you would already in a late stage uptrend, so right here it would have been choppy, but you would have had to use other kind of instances as well. But for the most part, you can really use this perfectly as it goes. And notice the angle of the trend, angle of ascent, heavy angles to the upside, heavy angles to the upside. Right here, it's starting to go sideways. As it's going sideways, the market's going sideways. And then same with up here. Heavy to the uptrend, upside. Now it's heavy to the downside. When it's heavy to the downside, it's hitting it and getting rejected, hitting it and getting rejected. When it's heavy to the upside, it's tapping it, bouncing heavy, barely undercutting it, holding it, bouncing pretty heavy. Same with over here. It's going sideways and it fails. Comes up, goes sideways and fails. And then you can see the market breadth as well will show you, kind of help you determine whether it's going to fail or push forward. Like right now, what do I want to see? Well, I want to see something similar to this. Kind of this sideways movement or downward movement. Hold this 21 EMA, use it as support now, and then bounce up and come up to this 20,100, 20,000, somewhere right around there. That would be ideal. And so that's how you can use this in a swing trading and day trading stance. You can see that that it works multiple times over and over and over the last couple years now. It's worked very well. During sideways markets, it doesn't work quite as well, but in trending markets, this works best. So how you're going to do it is you just go to your indicators, type in EMA, moving average exponential. I'll get rid of this one for right now. You're going to turn it to whatever color you want, and then set the length to 21. And that's it. It's as simple as that. You look for longs when you're above, you look for shorts when you're below. If you're day trading, when you're above it, you're looking long. When you're below it, you're looking short. It is that simple. So how can you guys get this specific trend template in the trend journal? You can create it yourself, but what I'm going to do is I'm going to leave this specific copy. I created a copy for you guys. I'm going to leave this specific copy, share it, and it's shared before you can edit it, so you can edit it. What I want you guys to do, if you want to create this your own trend journal, come over here, click copy sheet right there. It'll copy your sheet. Then you go File, Blank Worksheet. It's going to pop up a new one. Then you right click and you click Paste Sheet. And now you can have your own trend journal that's already filled out for the last year and a half, for the last year since September 2023. Everything is already filled out for you up until 8/16. And then all you have to do is every single day you fill this out. So tomorrow will be the 19th. So 8/19. Boom. This would be 8/19/2024. Day 4. And then whatever happens today. Something, some sort of note the leaders, note the laggers, and that's all. So that's how you can use the trend journal. That's how I use it. That's how you can use it in a swing trading standpoint. That's how you can use it for a stock selection standpoint. That's how you can use it for a day trading standpoint. And this is how you can duplicate it and keep track of it on your own. I hope you guys enjoyed this video. I hope you guys learned something today. If you liked it, like and subscribe. Look forward to making more for you guys. Enjoy the rest of your evening.